Here's another method that can be used to depreciate long-term assets. It's called the activity method or the units of production method. So let's go through this new method here that can be used using the same example that we did earlier. We're going to use the whale. This whale, which we had paid $630,000 for, has an estimated useful life of 10 years, and management thinks they can get 8,000 performances out of the whale over those 10 years. At the end, it's going to expect to get $10,000 as a residual or salvage value. Now, I haven't used this information before, and it is needed for this method. In this method, the amount of depreciation will depend on the amount of use, the amount of activity. In this case, I had 750 performances in 2001 and 820 in 2002. All right, so how do you calculate it? You take the same numerator that we used for straight line. They call that your depreciable cost. It's the cost minus what you think you're going to get for the asset when you're done using it. But the difference here is that you're going to divide by the total units. Now, units can be performances, like in this example, or if it was a truck, it would be probably miles, so that you can use different units. So whatever makes the most sense for the asset is what you'll use. Well, this is a rate that you get, and we're going to use that rate every year to figure out the amount to expense. So once you get that rate, then what you do is you multiply it by the amount of use for that period. So let's go through 2001. We have the rate equals your 630,000, the cost, minus your residual value or salvage value. Then you divide it by the total amount of performances for its entire life, not the amount of performances for the year. But what you will then do later, though, is use that 750. I'll show you. So this comes up with a rate of $77.50. So every time that whale performs, you should match $77.50 of an expense with those tickets sold for that performance. But you don't do these entries every time you have a performance. You do these adjusting entries at the end of the accounting period, which is the year for us. All right, so $77.50 per performance. You have to then take that rate times the number of performances that you had, which was 750. So in 2001, they'll have $58,125 of a debit to depreciation expense, and a same amount for the credit to allowance, for accumulated depreciation. Now, as far as the financials, you'll have that income statement will show the $58,125. Your balance sheet now will have the first year accumulated depreciation does equal the expense, but that won't be the case for 2002 and thereafter. All right, now what will be actually on the balance sheet is the book value or the net book value, and it will be $571,875. And so now going into year two, our depreciation expense gets closed into retained earnings, and we go through and use it again. In 2002, we take the rate, the same rate, that doesn't change, but what will change is the amount of activity. The whale performed more in 2002, so the amount of expense is going to be greater. So you'll expense $63,550. Accumulated depreciation will get credited for that $63,550. So the balance in your accumulated depreciation is accumulating. It's a permanent account. Balance carries forward, so your beginning balance plus the credit due to the expense here will bring it to a balance of $121,675, making our book value even less. This method is commonly used for the extractive industries because they typically keep track of the activity. If you think about a business like, let's say FedEx or UPS. Oh, by the way, did you know FedEx and UPS merged? Yeah, they're called Fed Up. Anyways, that type of business wouldn't want to use activity method because you'd have to to get your activity for each period, you'd have to go through and get the odometer readings for every single truck so that you'd have the amount driven in that year and that year only. So you'd have to have the odometer reading at the end of this year, subtract what the odometer reading was at the beginning of the year. It's too much hassle. And since management can pick which method to use, they're not going to pick activity method. In fact, most companies choose to use straight line due to its simplicity.